Thank you very much. Thank you very much for having us, Tim. Great to be back again at the Share Cafe presentation, and great to be surrounded by a number of peers from the industry today. So thank you everybody for making time for us. I'm going to talk to you about three things today. I'm aware that there may be an audience or a number in the audience that are not familiar with the Splitit story. So I'm going to share our story. I'm then going to share our strategy. And then I'm going to touch on recent progress and leave as much time as possible for questions. Love to hear from you. So who is Splitit? As it says on the screen, we approach buy now, pay later very differently. Our research says, and our customers tell us, that those with credit cards don't want new debt. They don't want new financing, but they want a smarter way to pay over time. So Splitit pioneered, we invented a new way to pay by empowering consumers to use their existing credit card without going into new debt to spread payments over time. There's no applications, there's no fees, there's no hassle. Simply put, Splitit puts consumers' credit to work on their terms. If I was going to sum it up in one sentence, Splitit is buy now, pay later on all credit cards at the point of sale. Now, let me go on and talk to you about a couple of things more about who we are, and I'll talk about the cards industry on the next slide. In the US alone, there's over $3 trillion in credit balances which are unspent. Over 450 million cards alone. Over 2/3 of those are near prime, prime, or super prime. Customers that have balance on their cards, it's unspent and looking for ways to spend that, but arguably, as I said earlier, in a much more effective way. We've seen, as many in the credit card industry, heard and seen that the death of credit cards are near. Well, there was a recent report today in Payment Source and a number of recent studies that have showed that that's actually unlikely to happen. In fact, we believe, and we are starting to see, a surge in credit card spend. It's often driven as part of the economic recovery. We've seen consumers saving, and typically they'll spend a lot more on cards post-saving. And consumers tell us that they want to be able to achieve the benefits of buy now, pay later while still earning rewards. Moving ahead, how do we bring the benefit of what we said to life in the credit card industry? This is part of the magic of Splitit. A consumer never leaves a retailer's site, which is a great benefit for the retailer as well. They simply choose Splitit at the checkout, choose a number of installments, enter their credit card as they would for any other transaction on their card, and that's it. Never leaving the site, no applications, there's no additional fees or interest outside of the card, and there's no friction, there's no hassle. Anybody with a Visa or MasterCard can use Splitit today. Now, let's move ahead and look at where we positioned in the market. This makes us very different. We're intentionally different, but we believe that makes us complementary. What our retailers, customers tell us is we are complementary to others in the market. Where you see one of these brands below or other brands in the industry, such as my peers that are here with us today, you should also see Splitit next to you. A number of consumers need financing. They need that new debt, as people below providing new debt for buy now, pay later. We're allowing customers with their existing credit to pay over time. Two different consumer needs, two different use cases, two different solutions. We are very different, yet we see ourselves, and our customers are increasingly telling us that we are complementary to those that are in the industry. Now let me shift gears. I'm going to talk to you about our strategy, why Splitit, and then looking at some of the progress we will make. So moving on. Our strategy, we've essentially been at this. We're about 7 years old as a company. Our founders, Gil Don, Alon Fate, spent a number of years building the product with a small team out of Israel. And we took that outside of Israel really for the first time about 2 years ago, where we opened an office here in the US. We've been finding product market fit, enhancing our product based on that, building solid foundations, really to now lean into our strategy to drive significant growth for the next year, for the years to come. Our strategy, firstly, is acceptance. Is to rapidly expand acceptance in the categories we are focused on by partnering with the world's leading and most influential brands. And we're pleased with the progress we're making there. Secondly, is to be chosen. Typically at Splitit, we've only ever focused on the retailer and acceptance. We're increasingly starting to put a lot more effort into educating consumers about who we are so driving awareness, but then also preference. And we build that preference by both messaging at the point of sale, but we're increasingly engaging our consumers through a number of marketing and new products which are on the way. Third, it's about being loved. We have an NPS near 70. The consumers that use Splitit love Splitit. Repeat usage will increase as acceptance grows. That's why we're so focused on building acceptance. But we're starting to see some really strong green shoots in terms of repeat use as well. But we're really leaning a lot more now into providing an amazing customer experience through the product. We believe the best product, the most seamless product for retailers and for consumers will win the hearts and minds of consumers and retailers and be here for a long time. We're doing this mobile first. Finally, we will be everywhere. Wherever a Visa or MasterCard is accepted or used, Splitit can be accepted or used. We're a technology platform. We're not issuing financing to anybody. We're enabling existing financing. We have retailers in over 30 countries, nearly 40 now. We have consumers in over 100 countries. But we're going to lean more aggressively into here. And I'll talk about our move into Asia with Google in a few slides later. So moving ahead, why do people choose Splitit? Why should you invest in Splitit? Why us? As I said, we're in over 100 countries. We serve a different end of the market. We serve a more affluent consumer that does still want to pay over time, but the average order value of these goods is 4 times most other buy now, pay later options at over $1,000 US. There's no risk. We don't take on the risk. Our unique model through our IP means there are negligible losses, if any. Approval rates is whenever you have balance on the card, it's approved. We see approval rates for retailers above 75%, often above 80%. We're available to over 1.8 billion cards, or not said another way, anybody with a Visa MasterCard. And we see conversion improvement to retailers now at over 30%, all other payment options, because it is so seamless and there are so many consumers out there that can use this. We are focused on that, and I'll talk about that on the next slide. Which is the reason we exist today, is to help retailers and merchants improve conversion. We're relentlessly focused on improving conversion by reducing cart abandonment. We're increasingly also focused on improving cash flow as we enter the services market and professional services through partnerships such as our friends at QuickFee, and more recently at Findex as well, by allowing people that send invoices that provide professional services to be paid faster. Now let's move on and let me quickly talk about some progress we've made in recent months. Our acceptance continues to grow, more recently adding Quicksilver and Roxy. I'll talk about Google later. But some of the world's leading brands in some of the major categories we're focused on: your home, outdoor and fitness, and luxury. We're seeing incredibly strong demand across all of those sectors. We've traditionally been strong in the home, making a lot more progress now in luxury and outdoor and fitness. We're starting to see a lot of interest in other adjacent verticals that we'll report on in due course. We also are moving along, announced earlier in the year a partnership with Goldman Sachs, where they've provided a warehousing facility that supports up to $800 million in MSV. It's a recurring warehouse facility. It will essentially double the size of our existing credit facilities. It will enable gross margin expansion, given the cost of funds will be significantly less than what we had in 2020. And it will allow, this is a 3-year facility, so it can keep renewing over year. So it will really enable our growth strategy, both in the US, but also around the world. Let me quickly talk about Google, and then I'll stop for questions. On the next slide, we announced back in January a partnership with Google, and just the other day announced that they have moved ahead live with Splitit in Japan. What we're showing here is on the left, a piece of marketing that Google are sending out to a number of consumers around Japan, not only promoting their new Pixel, or the Pixel, not the new Pixel, the Pixel, but that they can now pay in installments, powered by Splitit. One of the unique abilities of our platform is to be white labeled or soft labeled into any platform. So we're powering installments for that brand if they choose to take on that. Google have chosen to really push the installments provided by them, and it's powered by Splitit. We think there's enormous upside in pursuing this further in the future. And over on the right, you can see the user experience. I know it's in Japanese, and not all of us will be able to read Japanese, but you can here is Google have implemented installments on the left, And again, explaining to the consumer on the right that is powered by Splitit. That is all for today. I can't wait to hear your questions and engage with you all. Thank you very much.
Thanks, Brad. Always good to have you. Lots of questions, actually.
Great.
Starting off with this Goldman warehouse facility, does that reduce your need to raise capital?
No, unrelated to capital. Well, we were earlier, I guess, in our evolution, we were using capital off our balance sheet to advance funds to merchants. As we grew, that became unsustainable. So we have now moved away from that model. Some of our capital gets tied up in some fees associated to that and covering a small portion of the advance rate on these facilities. But no, it's pretty much separate. This facility is to allow us to give funds to retailers in advance.
Right, gotcha. And can you give us an update? There's a question here, an update on your Visa and your MasterCard partnerships?
Sure, probably the most commonly asked question that we get. Nothing more than what I've shared in market. We announced a pilot with Visa. That went very well. We continue to expand that now to other retailers outside of there. I don't think we'll announce every single retailer that adds that integration through Splitit. We'll announce major things. MasterCard progressing incredibly well is all I can say right now. There are a number of things happening behind the scenes. If you remember when we announced this, for those of you that invested back then, where we said these brands will help us with business development and will help us with marketing. They're not things that we can come out and announce often, but there are things that are happening, whether it's introductions to new retailers, to new payment companies, other partners, and marketing activities that the retailer may drive that MasterCard and or Visa have helped be a part of. So we find them both incredibly strong partners. We're very close to both of them. We talk a lot about the product innovation, but there's a number of other things happening which will start to drive scale in the times ahead. We're very excited about where that's at.
And just a basic question for potentially not a shareholder, but a new investor. Mm-hmm. Who pays you? The merchant via the credit card feed or the merchant?
The retailer. The merchant pays us. We charge a fee on top of their credit card fees. The consumer does not pay us anything. 100% of our revenue comes from the retailer. They look at this as a cost benefit. If we drive higher conversion for them, which provides a benefit over and above the fees, this makes sense. And we hear time and time again that we provide a benefit well above the fees charged.
And the Google partnership, is this for only Japan? Is this a starting point?
We agreed with Google that we would not say it was committed to anything else. I think that Google are a global brand, and our ambition is to partner with them wherever they sell goods. But this partnership right now is for Japan. Our ambition is to serve them around the world. One of our strengths and our unique values that we provide global companies is we are global from day one. So I would like to think so. That's our ambition, but we've agreed with Google that this partnership right now is for Japan.
And talking of your growth in the US and Europe, the key is to employ good people, good salespeople. How's that progressing?
Great. We announced a few people that have joined recently at a recent update to the market. We're continuing to hire, especially in the US. I think interest in the US and Europe is at an all-time high. We are hiring people at the enterprise level now. We've built an enterprise sales team. Now our platform is ready to sell into the world's biggest brands. We're selling it. We're talking to all of those brands now. We've also built out a number of sales teams across the world at mid-market and also inside sales, as our onboarding platform is starting to scale to allow people to onboard themselves and talk to us on an inside sales perspective. So it's growing. We've invested significantly, as promised, as part of the last capital raise, in sales and marketing efforts. We're starting to ramp up that team now. Those people take time to onboard, but I'm excited about what the rest of the year holds, especially the second half of the year as this team starts to hit their straps.
And whenever there's a conversation now around competitors, people talk about PayPal and the banks. Can you give us a little bit more color on potentially how that could affect Splitit?
The banks are our friends. I think we're enabling the credit card products to be used in the buy now, pay later space. We're bringing credit cards to the buy now, pay later space. Any credit card can be used agnostically. We serve them. Any Visa, MasterCard. PayPal are providing financing. We see them as complementary. So we expect to sit next to wherever PayPal is, wherever a firm is. Typically the two brands that we see on these categories that we serve. Or sometimes some of our other friends. but we see it as complementary to there, and we're bringing banks to the market. I think we talk to a number of banks around the world about how we may be able to support a more customized application of what they're looking to do. These conversations take a long time, but we're engaged in conversations with banks all around the world. We are different. Part of this is education. The other part is seeing how we can accelerate credit card and bank card use in the buy now, pay later space.
And talking of a couple of other partnerships, there's a question here that you partnered with Specialized and Bianchi, is it? Last September, but they're not live. What's the reason for that?
It's you have. I would put it this way: the retailers decide where their roadmaps are. Most of roadmaps closed down in October, reopened mid-January to late January. We expect to be live in some specialized countries very soon, and in Bianchi in the US very soon. So we don't get to decide that. I think the integrations are largely complete. If not complete, it's about now them deciding on their roadmap, what they push live next. We understand, we would love to see it happen faster, as everybody would. It's been delayed further than what we expected when we announced that in September. That said, those integrations are now complete, and we expect it to roll out very soon.
And you've had a strong 1 year performance, up 120%. Share price has had a bit of a pullback recently. What's the market missing?
I don't think the market's missing. Well, I think the industry is down. I hold ourselves accountable to medium to long-term return to shareholders. And are we performing at or better than our peer set in the industry? I would say that we are providing medium to long-term value for most of the time, except for maybe the last month, as the industry and the sector has pulled back, as there's been a shift away from fintech and away especially from buy now, pay later. Have we outperformed the sector? No, we haven't. And that's something that we're watching. There's a number of things which have happened in a more technical perspective. The fundamentals of our business have not changed. There's been more shares released into escrow at the end of January. There's been a number of other things happening around the surface. Our business has never been stronger. Our results have never been stronger. Our product innovation, our merchant acquisition, the feedback from everybody has never been better. And that's what we focus on. If all of those things are improving and increasing, we will deliver long-term, medium to long-term returns. We need to try to avoid looking at the short term, as hard as it is sometimes. There are a number of things happening around the side, and we're very confident. Not only will the return to shareholders be where it was very soon, back to where it was, but it will continue to increase as we show the results and we start to show some of the exciting things that we're working on.